Good morning, everybody. Hope you all had a good weekend. I'm looking forward to the week ahead. So let's have a look at what happened in the markets during the last week. And again, volatility is certainly the name of the game. Although we did finish the week in positive territory in most cases. We saw the Dow up 0.6%, the Nasdaq up 2.3%, the FTSE up 1.9%, and we had the DAX in Germany up 2.3%. The Nikkei lost a little bit of ground, was down 1.1%, and Shanghai, which has been the cause of all of the issues so far this year, was up, albeit only marginally, at 0.5%. In fact, during the course of the week, we saw a big V-shaped trend. What with Wednesday, we saw stocks hitting rock bottom, and in fact, by the close of play on Friday, many of the markets were 6 or 7% higher than they were at the beginning of the week. On that Wednesday. So if we look at currencies today, again we've got the US dollar remains strong. It was stayed at 143 against the sterling. It's been flat for the week. The Japanese yen, it did improve against the Japanese yen. It went from 117 to 119. Euro US dollar. Again, we've got a strengthening US dollar against the euro. It's down at 1.08 versus 1.09 at the start of the week. So, looking at the US dollar, this is another reason why a lot of people are talking about a weak market or a volatile market, is because of the strength of the US dollar. But when you look at the actual statistics, 90% of US GDP is taken up by consumer-based products. And the consumer, at this moment in time of low oil prices, has more money in his pocket. In fact, manufacturing only accounts for 7% of the US industries. So, therefore, you have a very small percentage of exports. So that's not really affecting the market. Yes, it is expensive for other countries to purchase US exports, but that's certainly not a major factor when it comes to the economy as a whole. Again, consumer staples, you've heard me talk about consumer staples. They're the places, I think, where you're still going to see some growth, not only due to the fact that, as I said, 90% of the US market is consumer-based and they have more money in their pocket, but you have the emerging markets and you have people coming out of poverty who are generally likely to spend their money on the same things that we spend ours on. So again, your big companies, your Unilevers, your Coca-Colas, these sort of guys, you'll be fine with them. The football continues to be interesting over the weekend. I think some of you may have read the article on my website about predictions and how difficult they can be. And in particular, I spoke about Leicester City and them possibly winning the Premiership. Leicester City were 5,000 to 1 to win the Premiership at the beginning of this season. They're now down to 10 to 1. It'd be interesting to see what sort of odds bookies are offering on any punters that were smart enough to have a go on that to cash out right now. It does go to show that predictions sometimes are a futile game, but at the same time we all love a prediction, and this comes into play with the markets in that we don't try to predict. It's a difficult game. It's a gamble. Markets go up, markets go down. Volatility's there, but companies remain good or bad investments. You have a company which is a good company. You have a company which will grow. Invest your money. It's as simple as that. The quote of the day I'm going to use today is from Warren Buffett. Surprise, surprise, you may say, but after all, in our industry, he is by far the greatest investor of all time. And one of his sayings is, "Someone is sitting in the shade today because somebody planted a tree a long time ago." Again, this plays into the retirement business and something which we can help with. It's a scary statistic that 49% of Americans now doubt they'll be able to afford a comfortable retirement. That's not a nice place to be. Retiring should be a time when you should be able to kick back, enjoy And the last thing in the world you need is to be worrying about money. The way to solve that is to get yourself organised, get a plan, get something in place. Make sure you have that there. And even if you are nearing retirement, there's lots of other options in that you can put your retirement pot into something which you can manage more closely and you can get more out of. All of these are options. It's got to be, they should be some of the best days of your life. And the last thing you want is to be spending them worrying about having enough. So the younger you are, the earlier you plan, the better chance you've got of achieving that financial freedom. And even if it's not about complete freedom, comfort. Because after all, you don't want to be worrying, especially at that time of life. So have a good day, everybody. Have a good week. And I'll catch up with you next week. You know where I am. Any questions, please get in touch. Bye.